Hello everyone. Very glad to see you all here. Happy New Year once again. If this is the first time you do a webinar in 2016, definitely wishing you a blast. However, right now we're going to discuss some serious stuff as if Eurozone CPI year-on-year data will be out. At the current moment, the forecast stands at 0.3%, and the prior figure stands at 0.2% respectively. So European government bonds are set to start 2016, supported by the resumption of the central bank's asset purchase program and a decline in sovereign insurance. After a year in which the European Central Bank attempted to bolster inflation through its 60 billion euro, 66 billion US dollar a month bond buying plan, the first major economic report of 2016 will show that consumer price growth remains in fraction of the central bank's goal. Investor demand for bonds may also be underpinned by Germany paying around 23 billion euros of redemptions due on January 4th, the same day ECB bond purchases, which were halted on December 21 before the holiday period resumed. The data today will show an annual inflation in the currency bloc accelerated to 0.4% last month, according to the median forecast of economists in the Bloomberg survey. And by the way, where was it? Here it is. Here we go. According to the views of the economists, we have the survey summary, and the median estimate stands at 0.3%. Average estimate stands at 0.36%. High estimate stands at 0.5%, and low estimate stands at 0.2% respectively, whereas the number of estimates this time has reached 32. And we'll continue discussing the projections. So while that's up from the forecast up from 0.2% in November, it's still short of the ECB's desired rate of just under 2%. At their latest policy meeting on December 3, officials cut the deposit rate to minus 0.3% and extended the bank's quantitative easing plan by at least 6 months. John von Jurek from Nordea Bank AB in Helsinki, so that most European events will favor bonds, a positive start to the year, and will probably get that the ECB fears of further easing has very much left the door open, and at the very least, they will cut the deposit rate once again. If you look at the dynamic in terms of supply and demand, you have most countries seeing lower insurance, and at the same time, you have the ECB buying. So benchmark German 10-year bonds yielded 0.63% as of the 5 p.m. London close on December 30, the last trading day of 2012. The price of the 1% security due in August 2025 was 103.45% of face value. And I think that's pretty much it on the fundamental part of this economic data review. If you excuse me, my slave needs to make me a massage. So Max will continue. Aww. Yeah, say hi, Gita. Hi. So yeah, Max, you're very welcome to continue.
Thank you very much, Kalina and Gita. Hello, everyone. I hope you have a great day so far. So actually, it has been quite a long time since we have discussed any economic data released from the euro area last time, but today is the day when we discuss the Eurozone inflation, because today it is expected actually to pick up from 0.2% to 0.4%. 4% in the best case. At the same time, yesterday and earlier last week, we have had some disappointment from Germany and from Spain, where inflation didn't rise as expected, and therefore it is quite likely that today the reading for the whole Eurozone will also miss the average estimate and possibly will increase by less than 0.4%. And for instance, such big financial institutions like BNP Paribas, Commerzbank, Goldman Sachs, and Morgan Stanley, they all expect the inflation to pick up just to 0.3%. By the way, it's of course for December of the previous year. Speaking about the trading strategy, we have the euro-dollar currency pair today, the negative surprise trading strategy. Also because this particular currency pair has a very bearish sentiment in the market right now. 57% of all positions are short on the euro, and also the majority of the pending orders in both 50 and 100 pip ranges from the spot are placed to sell the single currency against the US dollar, as you can see in more than 60% of all the cases. Also, the sentiment on this currency pair is bearish in the other markets like Wanda, Daily Forex, and Saxa Group. Speaking about the current trading situation, you can see that the pair is trading at 1.0779 level right now. Actually, speaking about the possible market reactions after the data is published in around 2.5 minutes from now, we don't expect any significant reaction, as usually it is the case for the Eurozone, because all the Euro areas data releases don't bring that much reaction for the Euro, unfortunately. As you can see, the average reaction for the Euro-dollar currency pair for this particular data release has been just 13 pips in the last 5 months, since July till December. And the reactions ranged from 7 pips in October up to 20 pips in December, when we also did have a kind of disappointment from the initial CPI estimate for the Eurozone. So therefore, the first take profit level is placed just 11 pips below the spot price, which is supported by the weekly S2 and daily S1 support lines at 1.0764. Actually, since I have just 1 minute left, I will shortly mention the technical indicators for the euro-dollar currency pair. As you can see, the short-term indicators are pointing to the downside right now, while the 30-minute indicators are mixed at the moment. So it means that the market is quite unclear and undecided right now whether the inflation will indeed increase less than expected by 0.4% in December. By the way, we will also have, I hope so, in the chat section, we will have the data on the core inflation in the Eurozone, which excludes energy prices and which is the less volatile indicator for the consumer prices. According to the expectation, the core inflation should increase by 1% exactly in December, which is still 1 full percentage point short of the ECB target of 2%. Okay, I guess we just have some 5 seconds to go till we are going to have the data in the chat section, and we'll have the initial reaction from the euro-dollar currency pair, hopefully. As you can see right now, it is quite undecided. Right now, the currency pair doesn't move that much. Actually, the CPI rose by just 0.2% on the annual basis in December. The average survey was actually 0.3% on the median basis, while on the average basis exactly it was 0.36 percentage points, which was a kind of rounded to 0.4. While speaking about the core inflation, it is also It also fell short of expectations by rising by 0.9 percentage points in December, even though it was expected to grow by 1%, as I have already mentioned. So two misses on the European inflation, which is kind of disappointing for Mario Draghi, of course, who just decided in December to increase its stimulus program beyond September 2016 and also cut the deposit rate to minus 0.3%, as you may remember. Speaking about the average reaction right now, we see that the euro is a bit uplifted right now, even though initially it attempted to go down, but still the bulls seem to be quite strong right now, and they hold the ground. And the pair rose just some 9-10 basis points to 107.81 level, and it didn't even reach the first stop loss level. So quite a small reaction for this particular data release, even though the data was very important indeed. Okay, I guess that will be all from my side on the technical part today as well. Thank you very much for listening. I wish you all a great day ahead. See you all tomorrow. And back to you, Polina.
Thank you, Max. Thank you, everyone. And thank you very much for speaker for your webinar. And next up, we'll have our neighbor from Estonia, Karel, ready to broadcast his first webinar in 2016. See you very soon, guys. Take care. Hi, Karel.
Hey, Polina.